Hi, welcome back. This is the Dapper Dividends live. We're on YouTube and we're broadcasting to the world from my basement. What's up? And it's a little warm down here. Hey, breaking news, ladies and gentlemen. Welcome in. It's crazy. My wife and I went to Costco and we spent under $200. That's a win for us. And hey, I'm so happy you're here. It's kind of interesting. We will oh, you didn't get to see that, did you? Yeah, you did see me hide my what's up, Adam and everybody else. So I'm going to welcome you all in. We'll do the dividend news, when we get to it, and look up stocks, things you're buying. I saw your question, Mike. And yeah, what's up? There's so much to talk about. You saw the thumbnail, you saw the yield max with the X over it. We'll probably start there. But to answer your question, Mike, I wasn't unfamiliar. If I wasn't unfamiliar with REMX, does that mean I was familiar with it? I wasn't unfamiliar. No, I don't know. I've done confused myself, but I had never heard of ticker REMX, which looks like an ETF of rare earth metals. And honestly, to me, that looks way more speculative. China controls pretty much dominates the world market on those. I know we're trying to shift it here and whatever, but VNQ, that's just your REITs. The only problem I have with VNQ, man, is there's a lot of junky REITs that are in there. And I think with REITs, you can just, if you want steady, reliable income, just go realty income. I mean, the growth is going to be glacially slow, in my opinion. And, it's like I talked about with Travis from Dividend Collection Agency. I think Agree Realty and Vici Properties will continue to outpace realty income on a total return basis. And that's where I'm putting my money mouth. That's where I'm putting my money where my mouth is. So I sold out of realty income. But so that's that, Mike. If you want steady, reliable income, I guess I would say VNQ. But if you want way more upside and probably dividends that are all over the place, but potentially, obviously, more growth, I would go REMX. So, but yeah, I do have a question with you guys with the newsletter because a reader hit me up and replied and said they weren't able to read the Seeking Alpha article. So I didn't know this, but I wonder if they cap how many people, when I share the link, can read it. Because like I said, I get a few free shares, I think 5 a month, that any article, I can gift it and I copy the link and send it. But I guess if you were a huge, they might not want 500,000 people just reading an article for free, I guess. I don't know. So let me know if any of you had trouble with that, because it may be capped and that might blow apart my thought of giving everybody a free read for the week. But Steve, I'm glad you enjoyed it. And I still need to, do you guys write in diaries? Does anybody do that? I like writing, but they say if you want to learn about something, you should write about it. And I've learned a lot when I was writing the newsletter, because I would write something and then you think like, well, I don't know, is that accurate? And then you research it, and then that can lead you to something else and to something else, and you just become smarter about that topic. So what's up, Josh? You're waiting for Sunday Night Football. Yeah, we'll have it on. I love it. I'm a football junkie. I am. I do. I don't like to get too much into it because I understand. Look, if I was listening to an investing show and the host was hardcore about Parcheesi and he was stopping every 5 minutes to tell you about Parcheesi, I would be like, all right, dude, I'm out. I just really don't care about Parcheesi. Now, yes, there are some people out there that are fanatical about Parcheesi. I am not one of them, and it would completely lose my interest. So if and when we do bring up football, it's really quick, and then we move on. So, Mike, that's interesting. Michael Burry, that caught my attention this week. And one of the things I shared in the newsletter was his name's escaped me right now. I was unfamiliar with him. He was on Odd Lots, and he reiterated what Michael Burry was saying, is basically that these tech companies are depreciating their investments into AI, like chips and data centers, over 6 years. And if you look at Nvidia, they're replacing things in 18 to 24 months that the technology is becoming outdated. So Michael Burry is saying that it's not fair, or it's manipulation, it's shenanigans, it's accounting shenanigans to depreciate. So, if you spent 60,000 on a chip and you depreciated it over 3 years, that'd be 20,000 a year. But if you do 6 years, it's 10,000 a year. So it's kind of artificially inflating those profits as to when you realize that money you spent. So he's saying that, I think it was, Oracle is like 21% inflated their earnings, and Meta is like 21 or 27, whichever it was. So that's going to be interesting to see. And I agree that a lot of the technology, it moves so fast that it's not the equivalent of PepsiCo buying a piece of equipment to produce their product where you can depreciate it over 10 years or 6 years, whatever it is. So it's interesting to see. And, he took a bet against them. And Paul, was it Paul? Oh, I forgot his name. But he made really great points about the data centers potentially being the linchpin. But dude, hey, if that's the kind of weird stuff you're into, man, I'll just have to talk like that the whole time. So I did have to check. It's like 30 minutes before I went on, I realized that I went to the charger to grab my battery, and I was like, uh-oh, I recorded with Travis and then left the camera on. So my battery was dead, charged it for 30 minutes, got 2 ticks on it. So hopefully it'll carry us through. Yeah. About YieldMax, let's real quick. If you haven't heard YieldMax, I'm almost caught up to you guys, but I want to get this on there because some people are going to jump on and potentially jump off so this was, I went to Reddit. So I went to Reddit, and yeah, I've you guys know my thoughts on YieldMax. Not a fan. And I caught a lot of crap from people about that, but they are on November 28th. They're going to be reverse splitting. And this is from Jeff Patak from Morningstar. And look, it's on there's a whole Reddit just for the YieldMax ETFs. But he doesn't have the tickers here. ULTY is doing a 1 for 10. And I put on Blossom. Some of you saw that. I'd had a few Guinnesses when I read this, but if you had the way this reverse split is going to work, ULTY, for instance, closed the week at $4.16. So if you had 10 shares of ULTY, which I said, if you have 10 pieces of garbage worth $4.16, after the reverse split happens, you will now have 1 share of garbage at $41.60. So you see how that works? And it's the same for all of these. TSLY, the NVIDIA, so this is the list of them. They're doing the reverse split. And traditionally they will do that because the prices go so low, they could face being delisted from the exchange that they trade on because they don't want penny stocks, and they have a certain minimum price. So companies will do reverse splits. We've talked about this. If you're a brand new beginner investor and you just stumbled into this, all you need to know about any split, whether it's a regular split or reverse, changes nothing fundamentally about the company, the business. And if it's like a pizza, it's just how many pieces is that pizza cut into? It's still the same exact pizza and ingredients, just how many pieces is it cut into? So I actually this morning, because I'm an absolute lunatic, I put this in the show description. So if you want to check out this, and it's only going to be for today, it is not going to update automatically. So as of today, I went back and looked at all 57 YieldMax ETFs and compared from their inception date to today versus their reference asset. Now, some of them were a little bit tricky, but for instance, like we have the Apple, it's with dividends reinvested, it's underperformed by 28%. And the crazy thing is some of these, like the Coinbase does not pay a dividend, and CONY, which is the yield max ETF, super high dividend yields and all that, it has underperformed by 40%, and Coinbase doesn't pay a dividend. So yeah, all of these, check it out if you want. We won't spend too long on it, but my findings were that out of 57 of these, 42 underperformed the reference asset. Now, some of them, because they will use a basket of yield max funds or an index plus, so it made it easier to just do VOO, because I don't have the time and capacity to do 25 different holdings and go back. It would have been too difficult. So when on some of those, like I put the reference asset as VOO. For like YMAX, it's a whole mess of yield max funds. I was just like, okay, we'll just compare this to VOO, and VOO still beats it. So, but yeah, anyway, that was my findings. 74% underperformed the reference asset, or when it was too difficult, the S&P 500, and the average underperformance was 30%. So there you go. Check that out if you want. And that's my bit on them. And we can all tell me if I'm wrong. Are you still invested in? I know Darth was in some of them. I don't remember which ones. Does anyone remember if Darth is going to pop on? He swung by to say that he liked some of them, and I got a sheet now that I could check it to. But you're welcome, John. I will drink to that. I'm an indirect investor into Costco, but Pat, let me write you down. Pat in the hat. We can look at that. UTG. Wait a minute. Why is Vici a dud? Because somebody, I know it wasn't you, but somebody told me that I don't understand the love, it was in the comments that I did with Travis. Somebody said, I don't understand the love for Vici, that it's dead money for the past 5 years. But I went back exactly 5 years to 2020. It has an almost 9% average annual return with dividends reinvested. So, I'd say for a REIT that's returned almost 9%, I think that's pretty good. Yeah, we'll see. I don't believe I've ever looked at UTG. So, okay. All right, good, Dresh. Thanks for telling me that. If you're just jumping on, I asked the question because somebody told me they couldn't read. So I wonder if, and didn't get around to it today. I'll email Seeking Alpha and see if I can get a number on that and tell them, hey, I'm not going to say, like, what's the difference if 50 people or 500,000 people read the free article? Isn't it more eyeballs on your site? So I'm going to tell them, like, you're already letting me give the article out for free. Make it unlimited. What's the difference? So I'll get back to that. I'll put a post. I'll make mention of that in the next one. So, all right, Steve, that's interesting. So I'm glad you guys let me know that. I'm going to get an answer. I will contact Seeking Alpha and see if I can get an article or an IR. Sorry, I'm talking, thinking, reading about Ireland here. Where in Ireland are you at, MB? I had a good time when we went to the Emerald Isle. Yep, you said it all, man. You said it all. Ooh, Dresh, let me see something here. I think I might still have the image file. Here we go. Boo, look at that. So I still have it saved. To anyone watching here, this was about, I don't remember what we talked about. Something was splitting. Maybe it was, we did this a while ago, but yeah, the stock split, whether it's a reverse split or a regular split. So in my experience, and there's only one that I can think of, let me know if you have any, that most times when a company reverse splits, it's because the stock price keeps falling and falling and falling, and they're in danger of being delisted from the exchange that they're trading on. So they will reverse split. And I have experienced this, unfortunately, with Aurora Cannabis, ticker ACP, going back to some of the early days when I was still chasing, but yeah, it doesn't change anything about the business or the ETF. It literally is just taking the whole pizza and cutting it into smaller pieces or bigger pieces, I guess, like melting it all together into a one bigger piece, right? What? We're talking about reverse splits, John.
Not in gymnastics.
Say that a little louder. Nobody heard you.
Reverse splits from gymnastics?
Yeah.
On a beam? On a bar?
You have a filthy mind and mouth, woman. That's probably why she's my wife. Anyway, I don't remember what we were talking about, but there you go, Dresh. That's for you. Mark Peter Thiel sold out of NVIDIA. I don't know if I would have sold all of them. You know what would have been better would be if you are super, super skeptical and you've had a huge run up. I think that it would have been best to probably just take out your cost basis on a worst case scenario. That way you got some skin in the game. But anyway, there's that. Wait, nope, I took myself off. 10-year bubble, take a drink. Yeah, well, we'll see. Let's see. Learn that ULTY isn't a covered call utilities, folks. Oh no, it's a whole mishmash of their. Let me get caught up here to you guys. MB, I think I was asking you, where in Ireland are you from? And if you would be so, oh, there you go. I was going to tell you to give us make sure you give us your exact street and address and house number. Don't do that. Let's see. Mike, you're in Nevada trying to find a good ETF on offensive VNQ. Avicii is in there. Well, I don't know if you're worried you just have too much exposure to Vici or you don't want any, because as long as the casinos, they have CPI escalators built into the contracts, they contractually have to pay rent to Vici properties. So whether the casino has to beg, borrow, or steal, they are legally obligated to pay rent to Vici. So unless the casino operator is in danger of going bankrupt, then I'm not worried at all about Vici. So I don't think it's a structural problem with Vegas tourism. It's going to get figured out, and it could be rough for a little bit. So you were from Clare. So we went to Galway. Very nice in Galway. We stayed at it was the Fairview, I think, because the view was fair. There was no view from the hotel. Jack, what's up, Jack? We can look at, what is that? Whirlpool, WHR, right? Yeah, it's been a minute. There's probably good reason that it's getting clobbered. Gino's East is my favorite deep dish pizza, and it could be. The reason we know how to use margin is because we know how to use margin. Hey, yeah, I know, Cody, right? You've been outspoken against yield max. I gotta say, for me, it's not, I don't want to call it gloating, but it feels like a little bit of, I don't know, humble bragging or something. I told people, I shared my thoughts. I gave my reason why. A lot of people said I didn't understand return of capital, that this was all this. And Pizza Hut was also thought of as good pizza at one point. Interesting. I think Yum Brands is looking at selling out of Pizza Hut. They were talking about dumping Pizza the Hut, if you've seen that movie. But yeah, I could tie this comment into both Coca-Cola, PepsiCo, and Yum Brands, because Yum Brands owns Taco Bell and Burger King. and Pizza Hut. So interestingly enough, oh no, not Burger King, KFC, right? Gosh dang, I forget now. I used to know this. Yeah, not Burger King. Who owns Burger King? It's not DRI. I gotta look now. Yum Brands is Yum Brands companies. Yeah, KFC, Pizza Hut, and Taco Bell, and The Habit, and they also had used to own Long John Silver. So back to my points I was making before I derailed myself. PepsiCo had owned Pizza Hut, KFC, Taco Bell. They spun it off into something that was called Tricon. I think Tricon Global. Tricon Global morphed into Yum Brands, but when they spun it off, PepsiCo did, they made a lifetime contract with KFC, Taco Bell, and Pizza Hut that they could only serve PepsiCo products. So that was a really forward thinking thing that they did. But as we saw today in Costco, recently, Costco went with Coca-Cola. So I did notice that the soda fountains were all Coca-Cola products when not too long ago they were PepsiCo products. So I would love to know what that was on. I would love to know what that did to PepsiCo's revenue, how much Costco bought from them. I'd love to know that. 95th and are you thinking Palermo's, right? Palermo's is, oh, there's a fantastic. We're not going to, don't worry, people. We won't do all pizza talk here, even though I'd love to, but who are you talking about? Wait a minute. I want to know. Who are you guys talking about with that guy? I want to know. Put it in. Yeah, who fled to Twitter X? That's right. QSR Billy. Thank you. All right, we'll do news if you guys are ready for it. We'll do that is too hot to drink. All right, we'll do news. Look at UTG, WHR. I don't know who We the Kemmers is. Maybe I'm too small that I didn't know who that is, but anyway, let me know. Let's look at news here because there was a lot. We're going to have to fly through the news. Yeah, go to the SBAC for Trevon. All right, we'll look at those three. We'll go through them quick. And here we go. Let me hide your comment. What am I doing? D's, I'll get to that comment in a minute. Here, you know what? Let me pull up Seeking Alpha anyway, because I like to give you guys the buy hold that they give on these, because I can, a lot of these, I'm just looking at the fundamentals, giving you my opinion, but it's kind of nice to see analysts that have dug in deeper to see what they. Yeah, good. You guys know it. You got that reference with Pizza the Hut. I was a little tiny baby cheering when that came out. Not that baby cheering-ish. Maybe 6, 7, 8. All right, here we go. What am I doing? I'm sharing the news with you. No, I'm not. What am I? I don't know what I'm doing anymore. I thought I was sharing news. Why is that on? Hold on. Hold on. What did I do here? Okay, remove that. Oh, I see what I did. Sorry, everybody. I shared the image. All right. This is what we're going to do now. On this. Why am I having a brain fart here? Hold on. Let me try this again. Share screen. Okay, here we go. Yay, he did it. We knew you'd figure it out. All right, so cheers and sláinte. Now, sorry, you see, I have football on. I'm distracted for a minute watching AJ Brown make a catch. Barrick Gold raised that dividend 25%. First dividend raise in quite some time. So that's their base payout was raised, and they will also pay a 5 cent per share performance dividend. I don't know, is Barrick Gold, so I guess they don't pay a variable dividend then. I think some company, I know a lot of people don't like to hear that, but Tyson raised the dividend 2%, looking like they're still undervalued since they had a lot of financial shenanigans going on. Interesting with this one, Kilroy, they got a dividend downgrade. Look at that. From 60 to 50. Everybody, Ryan Williams is still, I should text them. I think they're still invested, or he's still invested in Kilroy. Okay, got a lot to get here too. I said I was going to go quick. Aflac raised the dividend 5%, 43rd. Let us know if you're in any of these or buying any of these. What are you looking forward to this week? I'm looking forward to the TJX earnings and hoping they miss badly, because man, that's one I just keep waiting, and it just keeps going up. Amdocs IT consulting service raised the dividend 8%. And a lot of the consulting companies just been getting killed, like Robert Half. Robert Half has almost been cut in half, I think. ADP raised the dividend 10%. They've also been, it's a lot of uncertainty, right? We don't know how this is all going to, where these companies are going to be when the dust settles. Pfizer got reaffirmed their dividend safety score of 60, borderline safe, and they're trying to pay $10 billion for the obesity drug maker Metsera. That's all that they've been doing. They're just billions, 40 billion here, 10 billion there, just all these bolt-on acquisitions. Refresh the outlook on Federal Realty, FRT. If you don't know, the Simply Safe, they do their own unique outlook. So that is what they refreshed. Disney raised the dividend 50%. When I first read the headline, I was like, damn, big, huge raise, but it's still below where it was when they cut it. So very nice to see. But the dividend, if you've been holding since before they cut the dividend, eliminated it completely, you are still not to where it was before. Is anyone buying Disney? Verizon, they got a new CEO. Not for me. Too capital intensive, too much debt, too competitive of an industry. Never heard of Spire before, ticker SR, but they raised their dividend 5%. So shout out if anybody owns Spire. WPP, advertising company, got a downgrade to 40 unsafe. So I guess don't go chasing that 11% dividend yield, or be careful if you do. And the last one, Perrigo, they do white label pharmaceuticals. And I guess they've been in a turnaround. I remember I covered them a long time ago on the channel. That looked interesting, but they will take, for like, I think a Walgreens brand. If you see Walgreens brand aspirin, they make that, and then Walgreens just slaps their label on the bottle. That's what they do. All right, let's look up Pat UTG right quick. The Reeves Utility Income Fund. So it's a closed-end fund. They think it is reasonably valued at the high end of that. And it's gotten an upgrade. So Pat, you can pause the video to look at some of these numbers. I'm just going to go quick here. Yeah, this would be great for someone that is, which I think you are, looking for that stable and reliable income, that you're not looking for dividend growth or share price appreciation, right? So yeah, it looks reasonably valued. And it could be a good time to buy, because I like this. Simply Safe shows the premium or discount to the net asset value, and it's green. So it's 2% below. So you can actually get the net assets at a discount. So nice, right? And then it just shows their performance based on against other CE closed-end funds. Let's see here. What is this? UTG. Let's see what the quant thinks it is. Quant doesn't cover it. The analysts give it a buy. And let me show you guys what I'm talking about with the articles here. So, for instance, say I wanted to share this right there. You guys see that, right? You see the share tab. I had a 3. A couple weeks ago, it was a 5. So, yeah, it just says the recipient can read the entire article with no paywall. Yeah, I don't know. We'll see. I think that's other people, but I'm an affiliate for them. So who knows? I'll email them and actually, I'm going to email them and say, that's kind of dumb. Like, you should want as many people as possible coming to your product to read it. It's free. Like, again, what does it matter if 5 people or 500,000 people read that one article? You're just getting more traffic to your site. Like, you should want that. All right, a couple more here. Jack, you wanted Whirlpool. I think this will be quick. I think it's this, bucket of yuck, man. They did. There you go. Yeah, they cut now I do remember. July of 25, they cut the dividend 50% almost. A lot of struggles, tariffs and weak demand. So there you go. That's the reason they're saying. And man, dividend's been frozen since they cut it. Well, that ain't right. Or it's been frozen, excuse me. It has been frozen since like 2021. Yeah, there you go. So it was frozen and then they cut it by 50% almost. Man, it's just, I don't know. The market doesn't like it. Yeah. This is what I was talking about. For those of you, I don't know if Kevin will pop on, but free cash flow payout ratio. The dividend is paid from free cash. You can spend cash. You can't spend earnings per share. You can spend free cash because there's a lot of things like depreciation and amortization when you recognize sales, when things are recognized. There's a lot of things that can affect and manipulate the earnings per share number. So cash is really hard to manipulate. Like cash on the cash flow statement, and I'm sure there's ways to fudge it a little bit, but it's much more difficult. And as we saw with Enron, if people want to manipulate the cash, then they can risk going to jail. But so yeah, Whirlpool just in a world of hurt, man. Just yucky all around. And this is why everything. Look at the sales. Their sales have essentially been declining, trending down for 10 years. Look at that, $21 billion of sales in 2015, 16 billion, we'll call it now. Just, man, margins negative, declining. It's just, dude, I would just steer clear. Debt's going up. Ugh. This is why they cut it, man. This is, I don't even know. I guess we'll look at we'll see what Simply Safe gives, but I don't think we'll be too long here. Yeah, they give it a hold. And a couple people, though. Hawk Invest on October 13th gave it a strong buy. And I guess he's saying because David Tepper spent $27 million on Whirlpool. But so that's the glimmer of hope there, I suppose, is that David Tepper bought it. And then Trevon, we'll get to your SBAC Communications, which again, another one I don't know anything about. Telecom Tower REITs. Why is it getting crushed? Look at that. It's at a 50, or it's way below their valuation range. Let's see. Super fast dividend growth, 5 years. That's nice to see. It is a REIT. Yeah, it looks undervalued. I don't know. We'll have to see why real quick what Seeking Alpha says. But hey, yield is way higher than the 5-year average. The price it's like earnings for a REIT, the AFFO, adjusted funds from operations. AFFO ratio slowly climbing up. Yeah, I'm going to go really quick on these. So pause it if you want to see. This is what I like about Simply Safe. Oh, son of a gun. Come on. So I just looked at my phone and I swear I hit share this tab. So Trevon, sorry, man, just pause this. I'm going to go through what I said. You guys heard me say it as you got to, didn't make sense. That's me. That's on me. So here's some of the stuff I was talking about while you were staring at the Seeking Alpha page for Whirlpool. You're well acquainted with that now, but yeah, we would need to know, why is this down? Why is the, maybe because the sales growth was negative. It's been declining. AFFO growth is negative. They're buying back shares, which is uncommon for a REIT. Sales are still going up. So it looks good. I'm sure they have debt. Yeah. Sometimes it's a little wonky with this. All right, now let's see if I can do this right. Share this tab instead. And this was strong sell. The quant on Seeking Alpha gives it a strong sell, Trevon. So, but the analysts, what did they give it? The analysts give it a buy. So there you go. A little bit of disagreement there. And there's some of the reasons you can see on the left really quickly why a lot of the analysts are giving it a buy recommendation. So, hey, there's that. Yeah, I know. Sorry, Steve. I can't see that, but you guys can still hear me, right? Yeah. Weird. I got a little pop-up says that I lost my connection to share audio. Well, that's embarrassing. That's just embarrassing. My God. Apologies. You get what you pay for sometimes, right? When if it's free. I like to say if it's free, if it's for me. Hey, Walmart has a new CEO coming in. What do you guys think about that? Ba-dum-bum. Yes, Dresh, it is for the 5-year-old in all of us. Yeah, Robert Half. And you have to think, a lot of these companies is when I think that AI just dropped into the market and the ripples are going everywhere. There's dust where it's going to settle. Some companies, they're going to be permanently affected. And it's just the market obviously does not like uncertainty. So we've got a lot of uncertainty. Will ADP go down if unemployment, I think you're asking if they decrease? Potentially. I don't think they are per employee. I don't know. I don't know that. That's a great question. If anyone knows, it's just the companies that use them. But I know there's Paychecks, and our company uses Paylocity, which I don't know who owns that. Let's see if I can find that out real quick. Live. See if who owns Paylocity. Paylocity is a publicly traded company. Really? I did not know that. We got a ticker? Let's see. TICKE. I know you can't see this, but oh, interesting. Here we go. Let's share that. It's PCTY. I've never looked at this before. Let's see what PCTY is all about. If you're a hacker, please don't go hacking into my company and messing with all that unless you're going to give me a raise. Like, all of a sudden, be like, I don't remember Russ getting a $500,000 raise last year. Here, human resource company. They do not pay a dividend. And let's see when they cloud-based human capital management payroll software, which is, oh, no kidding. Look at that. They're headquartered and founded and headquartered in Schaumburg, Illinois, which is the town right next to Elk Crow Village. So look at that. Really strong. Again, just because they don't pay a dividend shouldn't turn you off. I mean, wow, sales still going up. They're diluting shareholders a little. So we won't spend too much time on this, and they have no net debt. And let's see what the good old hold, buy, and hold. Love the business, not the price. Okay, interesting. And we're done. So yeah, so that's a competitor to ADP then, right? Don't most closed-end funds trade at a discount to NAV? I don't know, Michael, if most of them do. I mean, so with a closed-end fund, it's much harder, I think it can be, to get open-end funds at a steep discount to NAV, right? Because when unit holders want to sell, then the fund has to sell, right? But I think the way it works when you buy a closed-end fund, do I do that? I don't know. I think I did a thumbs up and a bubble popped up. But when a closed-end fund, like there's no more share, it's closed. So the only way you can get shares is to buy it from another. I think they're called units, right? I don't think it's a stock, it's a unit. So you have to buy those from somebody else. And I think that's why it's so much harder to get, right, a open-end fund at a steep discount. So I think that sounds right. Adam, it's interesting. I was just reading Peter Lynch talking about cyclical businesses, and let's see if I get this right. His thought was that if you look at a low price to earnings ratio, if you look at a low PE for a cyclical business, it could be at the top of the cycle and everybody's dumping and selling. And when everyone sells and heads for the exit, the price comes down. So the PE is going to be low. And a lot of uninitiated investors might see that low PE and think like, ooh, low PE, I'm going to buy. But it could be the exact wrong time to buy. But then on the flip side, just because you see a high PE could mean that the cycle is about to turn. So a lot of people and investors are coming in and buying that stock, pushing the price up faster than the earnings, which is making it look like it hasn't really. Does that make sense? So I thought that was an interesting thought that I just read today. Breaking news from Peter Lynch talking about cyclical companies. And I think Phelps Dodge was one of the companies he was talking about, which was copper. They do like copper smelting, I believe. And he said, like, he talked to a plumber who said the price of copper was going up, and he knows that copper is much harder to come by than aluminum, that 8% of the Earth's crust is aluminum, and it's easy to extract aluminum, but copper, not so much. And I know it's dated because he said when copper mines, they get tapped out, they flood, they get shut down, and you can't just make more copper. Like if you were trying to make more Cabbage Patch dolls, you could just add another shift and make more Cabbage Patch dolls. You can't do that with something like copper. So fun little tangent. Pfizer and UPS. UPS, I know a lot of people are worried about that dividend. And you know what, Puck, man, let me get caught up in the comments and we'll look real quick. Puck UPS. Pfizer, man, I'm not sold. It's just, it looks to me like they're desperate for growth, desperate to find a winner, and they're just throwing billions of dollars for this non-organic growth, trying to find the next blockbuster drug, the next big winner. But that to me is a huge risk, because if it doesn't work out, you just spent a lot of money on something that, you could have tried to do with your own R&D for a lot less money. I would think that makes sense. All right. A lot of you like Hess Midstream, HESM, and MPLX, not to be confused with MLPX. Lowe's and Home Depot. Oh, that's funny. I didn't put it on Blossom. I did some raking, and I got Home Depot bags. I took a picture, a nice sunny. I'll put it on Blossom when I get out. Yeah, bubble for you because you're an OG, as Ian would say. But we'll just do a we'll just do the Seeking Out because we're getting short on time. We'll do the Seeking Alpha quick comparison here, and EPD. That's another. I've been waiting. When I talked to Kelly Green, Kelly Green, she likes it in the mid $30 range. She said, and then below $30 for her is just like a boom. You buy EPD below $30. So, Bubble, let's look at that right now. Let's start off with Seeking Alpha. I thought there was something else I wanted to show. I don't know. Stock market futures are, the 500 is 0.30%. What do you call that? 30 basis points, I think. So, yeah, it's looking like it could be a start the week off green, but that's not what we're here for. We're here to share this guy's screen. All right. I want to get a bigger. I got to fix that. Oh, I didn't even realize here, let me do this because I'm covering up some of the information. Sorry about that. Bubble. So we're not on Paylocity. Here we go. Takes a minute to find all. You guys try this. Talk and type and think and use your brain and have football in your peripheral and look up Home Depot and Lowe's. And we'll look up UPS. So here we go. The analysts, the rating summary, hold by hold. And it looks like Home Depot is expecting some issues. Well, a lot of strong sell, hold, sell, one buy. But yeah, this is one I'm always watching. I think Home Depot struggled a little because of the, whatever you want to call it, they've been picking up a lot of the day laborers that hang outside of Home Depot. Apparently they go in and buy stuff while they're waiting for work. Then Lowe's, hold by hold. So same thing, hold, sell, buy. So just from that, it looks like Lowe's could potentially be better. And Bubble, because I like you, we'll do this. We'll just see the cards here for Home Depot and Lowe's. Home Depot looks reasonably valued. 87 very safe. And Lowe's, which we're at Home Depot today. And Harbor Freight. Let's just talk about cheap Chinese junk. And they got American-made stuff too. Come on. Right in the middle of reasonably valued for Lowe's. And 93. So they have a higher safety score. So take with that what you will. Puck, you wanted UPS. 50 borderline safe. And let me see why. It's been a minute since I've looked at this. So you can pause this if you want to see. I'll stop here for a second. Dividend growth is, those are token raises. So it's good, but looks like they're treading water here. And yeah, it's just been beaten down so badly. I mean, that the market's telling you something there when the 5-year dividend yield average is 3.7%, and it's almost 7% right now. So the market is saying looks really risky to us. And if you're buying it here, you're going to, and this is what a dividend yield can do, right? People can, let me put myself back on. I can't see you guys. Where are you at? Here's what I do. Yeah. So hello. The dividend yield, when you see it go up really high, like here with UPS, you need to be compensated for that risk. So if the company is low risk, the yield is usually pretty low because everybody knows, right? So everybody sells, everybody's worried, the yield goes up. If you want to buy it, it's not a guarantee, but you're taking on more risk. So you need to be compensated for that. So you're getting an almost 7% yield while you are waiting for while you're waiting for UPS to do what it's going to do. So Puck, my guy. And then what did he say? This is no good. When you see this, 100%, the free cash flow payout ratio. Remember what I said, everybody. You don't pay the dividend out of earnings per share. You pay it out of cash. Free freaking cash flow, right? With the free cash flow, you can pay a dividend, buy back shares, carry that as cash on the balance sheet, do things like mergers, acquisitions, buy hookers and blow for your Christmas parties or your holiday parties, excuse me. I don't want to offend anybody. You can do that stuff with cash, but go try and buy hookers and blow with earnings per share. Ain't going to work. I'm going to bet they're not going to take it. They're going to say, we want the cash for your holiday party because we want to be all inclusive. But anyway, there's problems there for good old UPS for ups. I guess I think it's hard for me to imagine a world without UPS, but yeah, they've struggled. Earnings are down, or sales are down. You don't want to see that. One rule of thumb that some people like to use is you want to be very cautious around a company that has flat or declining sales consistently for multiple years. That's what UPS has, because that means less money's coming in the door. And I don't care how efficient you are with the capital. If you have less and less money coming into the business, unless they're printing money or being, I don't know, investing it, or it's going to be really hard to continue to grow the business when you have less money coming in the front door. So yeah, margins are all compressing. Yeah, I don't know, man. I'd stay away from UPS, and I think that was it with you guys. What you wanted? Yeah, Bubble, you got you. All right, let's see who else is there. And what's up? What's up, Ryan? Yeah, truth be told, everybody, I'm going to listen to his chat with Professor G. I didn't get a chance to this weekend, but it's a long week. I listened to a lot of stuff, and I did skim through it, man, and gave you the thumbs up. So that's the way the cookie crumbles. Yeah, dude, that's funny. I was thinking how they just crazy growth. I remember when Professor G was not to be confused with Scott Galloway. He was the first Professor G I was aware of, but yeah, I remember when Professor G was at like 15,000 subscribers or 20,000, something like that. Target's having earnings this week. Isn't that funny? I'm like, TJX, please, 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 baby Jesus, let them have bad earnings. So I did peek at it. I didn't do a deep dive into Otis. It still looks good, and I just worry about the growth. It just seems like one of those companies that's solid and boring. And it's funny. This is why I love talking to you, Ryan, because you make me think and things in your mind, thinking about our guys, Buffett and Munger, right? Munger always said, we didn't try to be smart. We just tried to be less dumb. Something like that. I'm paraphrasing. Oh, which, by the way, I got a hotel for the annual meeting next year in Omaha. But yeah, it's like Berkshire's whole thing was trying to prevent against catastrophic loss and not shooting for like high upside, and just doing that consistently over time. So like Travis said, Otis reminds him of a Berkshire type company. Very boring, very predictable, and slow growth. And when I say it like that, it's like, so why aren't you buying it again? And, humans, you're like, well, I want to see something at steep discount that's going to shoot right back up. But yeah, that's another one too, man. So I've got TJX. These are the high top of the list. Rollins, TJX, Amphenol. That one is but it's been a rocket ship. There's a lot. I could just keep going. Lincoln Electric, because it's something I use. Talk about something I use weekly. MCOR Group, ticker EMCR. They're multifaceted, but because of their involvement with data center build out and things like that, the stock price just blew up. And of course, before all that happened, I kept thinking it looked expensive, but yeah, so TJX reports this week, and it's funny. My daughter is looking at colleges, and I wasn't able to go. They went to Indiana. They went to Purdue and Valparaiso University with their cousin, and yeah, they ended up going to a Marshall's. Boom, owned by TJX. And the thing with TJX, with which they own, right? They own Marshalls, they own TJ Maxx, they own Home Goods. When we were in London, I think it's called like TK Maxx. Sierra Winners, I think, is another. I think it's a 4-in-1, but they're off-price retailers. It's that treasure hunt. You never know what you're going to find when you go into TJ Maxx or a Marshalls. And when people are hurting and the economy's struggling, businesses like that continue to do well. So yeah, well, my daughter won't be. She thought it was too big. She didn't really like it. Oddly enough, she liked Valparaiso University. So yeah, right. And so selfishly, dude, I'm really hoping that they pull back. But Lincoln Electric, like I'm reading Peter Lynch, and he talks about, I've used Lincoln welding products 26 years. Never bought the company. Why? I don't know. It's just like I talked about with Travis, that, yeah, they don't pay a dividend, but when Netflix was way down, even though the price was beaten down, we use Netflix. My in-laws, my brother-in-law, my coworkers, my friends, everybody has Netflix. Why didn't I buy it? I don't know. Don't worry, it's not lightning. It was a BetMGM ad, and there was camera flash bulbs. But yeah, Ross Stores, did look at them. Yeah, TKMAXX. That sounds like an adult entertainer's name. Oh, TK Maxx. Yeah, Ross is one that they're on the list. I have too many. I think on my watch list, there's almost 50 companies that I think are quality. And I honestly could make a case to buy all 50 of them tomorrow. But I don't want to do that. And it's tough. So, I almost want to do like a, one for one. So if I'm buying one, then I either have to consolidate into that one or what. But she's listening background. If you want to freak her out, say holy cow and thanks for the $5,000, Adam. Well, you want me to say that? Is that something to do with Purdue or no, Adam? I don't know. But I don't know if whatever, Purdue wasn't her jam. Felt too big for her and she didn't like it. But holy cow, thanks for the $5,000, Adam. Yeah, I agree with that, Deez. And it's funny, one of Buffett's quotes about the punch card thing, where it says, oh, imagine you have a punch card and whatever, if you only had 15 slots and every time you bought a stock, you didn't have any more, you would be different. I'm like, but he didn't do that. He's bought hundreds of stocks and sold them throughout the years. So, and I agree with that too, where you're number one, why do you put in a 20? So easier said than done. Some of these things are real easy in practice, right? So I don't know, is there anything we didn't get to? Stay away from yield max funds. Don't buy those. That spreadsheet, I have the link in the description below if you want to, that's funny, Adam. Check that out. Like I said, what do you do on a Sunday morning? Oh, I went through 57 yield max funds to find out how they performed since inception versus their reference asset on a total return basis, with drip turned on. But that's what some of us do. I don't know why. Because, well, I know why, because I've said that. That's it. And you know what? That's not right. It's not wrong. I know some of the super investors have owned. Did you guys see what? We don't have time. Dataroma.com. If you want to look at what the super investors bought or sold, we'll see. I'm doing an interview with Dividend Guy podcast Tuesday, and maybe I'll do that. Maybe I'll. inside baseball here. I probably need a quicker video or something, but I might, yeah. And then the only thing is I said that, D, is that, so if you wanted to have 15 stocks and you saw two amazing, crazy good buys, but you don't really want to sell any of your 15, well, it's an arbitrary rule. Like, what? We'll just buy the other two then. Do you know what I mean? Instead of potentially getting two that you have to, you know what I'm saying? It's yeah. And then I'll end with this, MB, where I had to put that post out because I saw everyone's like, Warren's buying Google. He bought Google, and I'm like, maybe. I doubt it, but Todd Combs and Ted Wexler are his lieutenants. They've done lots of buying and selling. They've bought and sold things that he had no knowledge of. So they had some semblance of autonomy to do what they wanted to do. And then there's Greg Abel. He's basically the CEO, right? So I know Warren's been more hands off, but it's more accurate to say Warren Buffett's Berkshire Hathaway bought Google, because it could have been Warren, Greg, Todd, or Ted doing the buying. We just don't know. They don't disclose that information. And I suspect buying such a large position in a company that's run up so much, that's not really Warren's MO. So I really doubt it was him, but maybe it could be. You know what? It might be. And you do that. If you want to buy something, you have to sell something. Again, I've burned myself with arbitrary rules. There's been times when I would see here, well, I want to share this with you guys, but there's been times, and it's cost me a lot of money, where I used to have I think a 2.5% minimum threshold on the dividend yield. Why? I don't know. Just because it sounded like I needed more income. I would look at things like Costco, Nvidia, even though I don't really understand it, probably TJX, all these companies, companies that had a yield of, say, 2%, 2.29%. How stupid would that be to say, yeah, I'm not going to buy that company, even though it looks great. It's a really solid company, because the dividend yield is 2.29%, not 2.5. Do you know what I mean? Don't just blindly follow arbitrary rules just because they're an arbitrary rule, is what I'm saying, I guess. And that's something I'm still figuring out and fighting over with myself. But Adam, I thank you so very much for stopping on by here on a Sunday night. The Bears pulled out a thriller. My God, I had a heart attack. I didn't think they were going to pull that one out against the Vikings up there in freaking Minnesota, but they did it. The Bears always come through. We've got Ben Johnson at the helm. He might be the magic man, just like they hire Brian Nickel to come in and take over at Starbucks. And then you got the other guy over there in the company that I just bought, which is Elliott Hill at Nike. You bring in these magic men. They work their magic at other companies. Ben Johnson worked his magic over there in Detroit. Detroit's filthy. You can buy homes for $1. You don't want to go over to Detroit. So Ben Johnson's coming in. He's coming in hot. The Bears are turning it around. He's doing a much better job than Brian Nickel at Starbucks and Elliott Hill over at Nike. So, hey, Nike is worn by players on the Bears, and the Bears won. So I'm going to have a few beers now, and I appreciate all you guys for coming on by. And now I can't. I'm stuck. I'm not stuck. Turn it off. Thanks so very much for coming by. And my guy, I miss Pee-wee. So glad I got to watch. I'm glad you guys got to hang out for a little bit. I really do enjoy seeing you. And I'll talk to you next weekend. So, hey, so long, everybody. Let's hope TJX takes a big hit and I can get him in at a discount. So